Good evening, and welcome to Blossom Market News. Tonight we are doing the full chart room breakdown, where Bitcoin actually stands right now, the one level that decides the next move, and both scenarios that follow from it. Here is how the next few minutes are laid out. First, the structure on the daily chart. Then the 200-week moving average and why its reclaim matters. Then the level we call the Blossom line, and what a real confirmation of it looks like. After that, both paths. The breakout case toward the 80,000 region, and the rejection case, which is far less dramatic than most people expect. We will finish with the Solana side and what our scanner flagged in the last 24 hours. One thing before we start. Everything here is analysis, not advice. Targets are scenarios, never promises, and nothing in this video tells you to buy anything. This is Bitcoin on the daily candles, and the shape of the last few months tells the story better than any headline did. Price came down hard from the highs, and for weeks every attempt to bounce was sold into. That is what a downtrend looks like from the inside: lower highs, sellers in control, and every recovery treated as an exit rather than an entry. But look at what changed recently. The selling pressure that defined that entire move has thinned out. The candles are smaller, the wicks are shorter, and price has stopped making new lows. That is the first thing we look for in our chart room. Not a headline, not a narrative, a change in how price behaves when it gets pushed. Bears have gone quiet, and the chart is telling us why. The gold line coming in now is the 200-week moving average. It is the average closing price of the last 200 weeks, nearly 4 years of market history compressed into one slow, steady line. Because it moves so slowly, it does not care about a bad week or a scary headline. That is exactly why traders watch it. Historically, it has acted as the floor of major corrections, and price spending time below it has been the exception, not the rule. So when price falls below that line and then climbs back above it, that is not noise. That is the market rebuilding the floor it just fell through. And that is what has happened here. Bitcoin has officially reclaimed the 200-week moving average. On its own it is not a green light, but it changes which scenarios are even on the table. Before we get to the level itself, it is worth saying how a level earns its place on our chart, because most of the lines people draw are decoration. A level matters when price has repeatedly reacted to it, turned there, stalled there, or spent a long time trading around it. The more times the market has agreed that a price is significant, the more likely it is to behave that way again. What we do not do is start with a target and draw a line to justify it. The line comes from what price already did. The scenarios come after, and if the level breaks, the scenarios change with it. Which brings us to the level that actually decides the next leg. The pink line coming in is what we call the Blossom line, sitting at 66.2 thousand. This is not an arbitrary number. It is where price has repeatedly turned in both directions, support that became resistance on the way down, and the same shelf price is now pressing against from underneath. Right now, Bitcoin is testing it. And here is the part most people get wrong, so I want to be precise about it. Tagging a level is not reclaiming it. Wicking through it intraday is not reclaiming it either. The Blossom line is a monthly level, which means the true confirmation is a monthly close above it. That is the signal that carries real weight, because a monthly close cannot be faked by one aggressive afternoon of buying. That said, you do not have to wait a full month to learn something. Several daily closes above the line is already a strong early signal. It tells you buyers are defending the level instead of just poking at it. So the honest answer to what happens next is, watch the closes, not the wicks. Patience here is not indecision. It is the whole method. Now the first scenario, and the one our chart room considers primary. If that confirmation lands, the path above opens up quickly. The reason is simple. There is very little traded volume sitting between the Blossom line and the 80,000 region, few places where price previously stalled, which means few natural points for it to stall again on the way up. That is what the projection on our chart is describing. Not a prophecy, and not a date. Just the observation that once the ceiling becomes a floor, the next meaningful resistance sits considerably higher than where we are now. A confirmed breakout above the Blossom line opens a clean path toward the 80,000 region. That is the scenario. It requires the confirmation first, and it is worth nothing without it. Now the scenario nobody wants to hear, which is the one worth understanding properly. Suppose price gets rejected right here at the blossom line. The expectation is not a collapse. It is a range, sideways consolidation between the blossom line above and the 200-week moving average below, with price grinding between the two while the moving average keeps rising underneath it. And that is the quiet detail that matters. In that scenario, time is doing the work. Every week the floor rises a little, the range compresses, and the eventual break becomes more likely rather than less. So both paths lead the same direction, at different speeds. That is why breakout remains our primary scenario, and why a rejection changes the timing far more than it changes the thesis. Every raid needs a line where it is simply wrong, so here is ours. If Bitcoin loses the 200-week moving average again and closes below it with conviction, this entire structure fails. The floor we just talked about stops being a floor, the range breaks downward instead of upward, and the breakout case is off the table until price rebuilds it. That is the invalidation level. Knowing it in advance is what separates a thesis from a hope, and it is why we frame these as scenarios with conditions rather than predictions with dates. So what actually deserves your attention over the next few sessions? 3 things, and none of them are headlines. First, the daily closes around the blossom line, not the wicks, the closes. Second, whether the 200-week moving average keeps rising underneath price, because that is the floor doing its work. Third, whether pullbacks are getting shallower. If those 3 line up, the breakout case builds itself quietly, long before anyone announces it. That is usually how the important moves start, slowly, and without a headline attached. Now to the other side of the market, where things move considerably faster. Here is what Blossom Scanner flagged in the last 24 hours. 205 coins were flagged across the session, and the top movers did the heavy lifting. Bullpad at 20.2 times its flag price, Babycupsy at 10.9 times its flag price, Worm at 9.0 times its flag price. Those are market cap multiples from our flag price to the peak, the moves themselves, nothing about what anyone did with them. The feed is free and the link is in the description. We are not going to explain the method on camera, but the flags are public and timestamped as they happen. So, to bring it together. Bitcoin has reclaimed the 200-week moving average. It is testing the blossom line at 66.2 thousand. A monthly close above that line is the real confirmation, and several daily closes above it are the early signal. Confirmation opens the path toward the 80,000 region. Rejection means sideways between the line and the moving average, then the eventual break. Losing the moving average is what makes us wrong. That is the brief. None of this is financial advice, and no one can tell you what happens next. Always do your own research. I will see you in the next one.